Bearish engulfing candle patterns are probably one of the most intimidating candlestick patterns that you'll see out there. It looks like the world's about to come crashing to an end. Now, there's a lot of people out there on YouTube that they will come out and say tonight that the world's ending, that the stock market's crashing, that you should sell everything that you have and go completely cash and go underground for the next 3 years. That's not what I'm trying to say here at all. And that's not what the purpose of this video is. What I'm trying to show you is just how this bearish engulfing candle pattern that popped up on the charts today, what that might mean for the markets going forward in a pretty sane and rational manner. I'm also going to go back and look at some old examples and of how it worked and how it did not work in the past. So let's go ahead and check that out. But first, make sure you like and subscribe to my channel. Hit that notification button so that you can be notified anytime I do a new video going forward. First off, you got SPY, and I'm not going to take a lot of time on this video. I'm going to be very much to the point as I always am. SPY had a nasty bearish engulfing candle pattern. It makes you very concerned, makes you a little bit leery going forward. It looks like that this might be a topping pattern that's being formed. So one of the logical places that this bearish engulfing candle pattern could go to is to this rising trend line and test it once again. You also have some support here that's being tested on a closing basis today. You can see it goes essentially right above it after testing it on an intraday basis. So you got these two levels right here to be mindful of. If it breaks through this candle pattern, yeah, I would expect it to go down there. But not every time you get a bearish engulfing candle does that mean that you're going to see further downside. Now, let's look at it from a couple of equities. We're going to pull up Apple first and go back to March 9th, 2023. And you had this small doji candle followed by a textbook example of a bearish engulfing candle. Now, did it necessarily crash? No, it sold off for another day. Oftentimes you will get continuation the next day, but you can see it went ripping for weeks on end thereafter. I mean, Apple did incredible after that bearish engulfing candle pattern. So you want to remember, when you get these candle patterns, it doesn't necessarily mean that the world's coming to an end or that it's going to crash. A lot of people will tell you that. Don't listen to them. Another example, Tesla. We'll go to June of 2023 on this one. And here, perfect textbook bearish engulfing candle. You had about a 3-day sell-off, and then it came right back up again. You see the trend here? Sometimes it can just mean that there's a short-term top, not a long-term top, not a crashing signal. Just sometimes it's a short-term pullback signal. And other times, looking at July of 2023, here you have July 7th, you have a huge bearish engulfing candle right there. And it didn't even sell off the next day or the day after that. But 3 days later, you get a heavy sell-off. And that was a pretty significant pullback, one that you would not want to be holding really long positions from a swing trading standpoint, even a good opportunity to short. So this is a perfect example where it did play out very well. But it doesn't always play out the way that we think it's going to play out. And here's an example of where it didn't play out at all in one's favor. You had a period of sideways consolidation, then you got the bearish engulfing candle, and then you had a ripper for the next 6 days. That is a massive move following a bearish engulfing candle. So there's not a certainty behind any of these, and people who would say otherwise are just trying to out there to fool you and get clicks. I'm not going to do that. Even if you find my videos boring, I don't care. I'm going to be the guy that tells you what I know and how I understand it to be. So SPY, back on April 4th, you had another bearish engulfing candle, and it didn't necessarily fall or break down right away. In fact, it traded sideways for about another week. Choppy pattern, but then when it did happen, you had a solid 6 days to the downside. So really, what do we know about this pattern? We don't know hardly anything yet about this pattern. We do have a rising trend line underneath. We have support just underneath that was tested today. We need to see if this support level holds, because guess what? If we bounce off of this level, it's going to offer up a decent swing opportunity to get long on some additional stocks that took hits today as a result of this sell-off. So there could be some good from a long standpoint that comes from just a 1-day bearish engulfing candle. And some people will say, well, it's not really a bearish engulfing because yesterday wasn't a green up day. It doesn't necessarily matter, because what does matter is the fact that it engulfed the entire previous day's candle. That's really the essence of a bearish engulfing candle. So if it does break this, let's take it a support level at a time. If it breaks it, great. Then we want to see what happens when it comes back down to this support level at 511. Does it hold it or does it bounce? If it doesn't hold that level, then the next level we're going to be probably watching is somewhere around this 493 level. And if that can't hold, then you're really starting to get into some murky waters here where things can get really ugly. But let's not get ahead of ourselves. Let's look at it from a support level, one at a time. If you enjoyed this video, I would encourage you to like and subscribe to this channel. Let me know down in the comments below what were your thoughts on this particular candle. Does this one give you heartburn? Does it trouble you? Let me know. Thank you guys, and God bless.